Hey everybody, Chris Scott here. It's been a little while since we've had our last podcast, so I'm really excited to be back in the studio. It's been, kind of a wild month, as May usually is. I don't think there's been a month that has flown by faster, maybe in my 21 years, than this past month. It's been crazy right from the get go, and maybe it's because April wasn't as quite as busy as it usually is. So there was a lot of people kind of waiting, and everybody decided to transact at once. But we're here. We survived our busiest month of the year. I'm here with Colin, my partner, and we're going to talk to you a little bit about what we're seeing in the market right now. And what I'm finding is, depending on if you're a seller or buyer or where you are in the city, you know, from our experience, a lot of people are having a lot of different experiences right now with the market. What I mean by that is, if you're a seller in the Glebe, Old Ottawa South, kind of in that, pocket of homes, and you have a nice home to sell, you're getting multiple offers. You're holding offers, much like we were doing a couple of years ago. You're waiting for buyers to come through, and typically at the end, if your house is well priced, you're getting an unconditional offer well above asking price. So I have some buyers that have been looking in that area, Old Ottawa South in particular, a little bit in the Glebe. And so we experienced that market, having to bid against other people. In one instance, we were up against 10 offers in on Brighton for a house that ended up selling for $360,000 over asking price. The house was really underpriced to start with, but it's hard psychologically to bid so much over an asking price, even if you know that it was undervalued from the get go. So we're seeing some of that in those areas, and then you have on the far opposite end of the spectrum, we have some clients selling in some smaller towns like Rockland, Carlton Place, Embrun, where they're not getting a lot of activity, and the inventory is just flooded right now. In terms of the resale market on MLS, and then all the new builds that are out there with their 15% discount. So it's been real tough sledding in those areas. And what we're seeing happen is, where you get all this supply, some people have to sell. Some people have made, decisions to move. They're relocated. So they will drop the price until they find a buyer to beat the rest of the competition. And what that does is, it's going to put downward pressure on prices in some of those areas. And then we have kind of the in-between markets, where, you have the suburban house, the Stittsville, the Canada, the Orleans, where it's very much a balanced market, where things are balanced. There's, a healthy amount of buyers for the inventory that's available. The good stuff, the well-priced stuff, is selling very quickly. Houses that are not showing that great are taking longer. You're seeing price drops on those ones. So it's been very interesting to see, the different markets within Ottawa. And, one thing, Colin, that, would surprise a lot of people. And I just asked, I confirmed this with Chat GPT, my friend Chat, and the city of Ottawa is, as far as large market centers in Canada, it's the largest city from a geographic perspective
Okay.
in Canada. So a lot of people don't realize that. And I know a lot of people would have Calgary, Toronto, which are on the list, but Ottawa, as far as major market centers, there's a lot of ground to cover in Ottawa, and within that geographic area, there's a lot of different things happening, depending on the neighborhood that you're in. Just want to see, how are you finding things? Like, how did you find things over the past month since we were here last?
Uh, it's been busy with lots of homes to see for buyers. They want to see a lot of homes.
Okay.
So, I mean, it's a challenging market with lots available. I had a house hunting trip recently, and we saw close to 30 homes.
That's a lot.
That's a lot of homes, but
Yeah.
they were all there. I mean, is
Yeah.
that better than when we had 6 homes to see in total, and they all had multiple offers on them a couple years ago,
Definitely,
right?
definitely better than that.
Yeah.
Something in between is probably best. So they're,
Yeah. But I mean, the challenge we had there was that the client still had to sell their home.
mm,
So, we're doing recon, I guess. But that's the same with every buyer. They don't want to miss out on a home that could be good value to them. They are spreading their net, maybe in different areas, like a wider area than they would normally because they have those options. So I say this a lot to buyers and sellers. I think sometimes having this much choice is not always perfect. Like I think some buyers are missing that opportunity to buy right now when the going is pretty good for them, considering other markets they
be-
could be in. Right?
because there's so much supply, they're having a tough time actually making a decision because they feel like they have so much supply that they
Yeah.
don't feel like the urgency is there, right?
There's no
Yeah.
urgency.
Okay, that's interesting.
I even have some
I
sellers
could see that.
who, don't want to make a move on their listing, a price change or something like that, because it's possible that they won't have something that they've chosen that they like that much, right? Which is weird because there's so much out there.
Yeah.
But as we know, having a high amount of listings,
And it
um,
depends where you're looking, right? When you say there's a lot out there, that's based on where some of your clients are looking. Whereas,
maybe, but we have that high amount of listings,
mhm,
but a lot of them are relisted from last year,
mhm,
either still overpriced or not in great shape. Like we're
mhm,
still in a market where you need to be a house that has something to offer that's different than other homes
yeah,
because there are so many
that's a good
options.
value, really.
It's got to be good value,
Yeah,
and it's easy to compare. Walking into 10 different homes and saying we like them, but there's also another home that's got this and this, and it's roughly the same price or less. Or right now, hey, yeah, this is a great home, but we can just turn to a builder and they'll sell us a house for 50K less than this, and it's brand new.
mhm,
And again, is that always the best choice for people? Maybe not.
mhm,
It's helping a few people and some builders, and there's some stimulation of the economy there. I think that's in
yeah.
play, but that's what's happening. That's what I'm seeing.
I mean, we talked about the builder, incentive there from the government, the HST rebate, quite a bit last time,
Hmm.
and it's been interesting seeing how that has, a month later, or I guess, I mean, it was really April 1st, but I guess so 2 months later, how that's impacted the market, and I really do feel like it impacted it the most for my clients anyway, the ones that were selling in kind of that mid to late April, where I mean, people weren't even looking at resale. They were in certain segments of the market in the suburban areas, on the outskirts. Doesn't really apply to anything, central. They were selling out their inventory first. Now that the for the most part, a lot of these builders have sold out a lot of their inventory. There's less options there available to them unless they want to close, which they'll still get the discount on, but unless they want to close, late next year or whenever
Yeah, but that doesn't
they're
work for.
building for.
Oh,
It doesn't work for a lot of people that want to move now, but that has definitely had an impact. And I have seen some prices on builders actually go up too,
yeah.
which was disappointing. To not to get into a political discussion, but when I first saw that announced, I thought, okay, this could be positive. But the more I read about how it's going to what the legislation is and how it's going to be implemented, the more I saw, really, it really felt like a builder bailout in terms of helping builders with all of the inventory that they had available, getting it sold. So those tax dollars are really a lot going to there. I mean, hey, it's going to have an impact on buyers. Some buyers are going to get houses for less. Sure, hey, that's not necessarily a bad thing. Affordable housing, I get it, but they're also going to be moving next door to somebody that maybe just bought from the builder for $100,000 less. I mean, that's a tough pill to swallow for some people.
Hmm.
What I would have really liked to see on that, and if I was in charge, I would have liked to see that only apply for first-time home buyers. Get first-time home buyers into the game. Instead of doing 15%, do the 15% and add on to it. Like maybe there's another rebate that they would do. It would still be less expensive than putting 15% across the board if you had, say, a 20 or 25% just for first-time home buyers.
Yeah.
Some type of rebate there. Get them into homes. That's that's who we need to, we need to get the next generation into homes. But I don't think the way they did it was great because builders have just raised their prices now. So I mean, it's a moot point now for some people. But it was really interesting to see the impact of that and how it affected certain pockets of the city.
Yeah, and I think that'll continue. Um, Even if we go to a building center, there's 2, 3 homes left that are available in short order.
Hmm.
So even though that's changing, it's stimulated some people to get moving. Certainly, it's given buyers competitive edge if they do want to turn to a resale home. I mean, those prices have certainly stabilized for now, maybe softened a little bit, depending on where you go, I guess.
Hmm.
But they're out there. The buyers are out there. If you have a home that's a good value price, there's still lots of people that are ready to buy. So I think that part of the market will continue. People will continue to be out there for the rest of the year, even if there aren't a ton of new builds.
Yeah.
They're ready to buy now. I don't think that they're going to be waiting on better rates necessarily. I mean, things are getting a bit better. For a minute there, we thought we might be bumping up overnight
Well,
lending rates
it's
because
actually
of
gone the other way.
inflation.
Yeah.
But now
It's
numbers
gone.
come out and
Yeah.
we're
The,
doing okay.
yeah, the fixed rates have actually gone the other way. So they've gotten higher over the past month
Yeah,
because a lot of that's tied to the bond market. So right now, so it's interesting because I just went through this with my home. I'm locked in with RBC, and I came up for renewal. So I was checking out rates and looking around at what mortgage brokers have and everything like that. Actually, which was I found interesting that RBC by far had the best rate right now.
interesting.
Uh,
Fixed or variable?
Both.
Yeah,
Whatever option you were going with was quite a bit less than everywhere else. And what they're pushing right now is actually not the 5-year fixed, but they were pushing the 3-year fixed as an option for them. So I ended up going variable. I mean, I'm a risk taker. I looked at the market, and I do think that based on the first 2 quarters, looking at GDP for Canada, things are looking kind of like a little bit of a recession there with the numbers,
a
which
technical
would
recession.
yeah, which could put pressure on rates to come down.
Hmm.
I'm also banking that the new, not to get too far down this rabbit hole here, but when I look at the states and I look at Powell's now out, Trump's got his guy in there at the Federal Reserve. I think that you will probably see them loosening their stance and lowering rates there. A lot of times Canada will follow. So, I think that, a variable rate right now is probably not a bad thing. I can't see things moving upward in rates over the next year, at least on the variable side. So
Interesting.
that's why, I mean, not to give you too much, but that's kind of what I'm thinking, and we'll see. So you have to have a little bit of tolerance for risk as well. I mean,
As a homeowner.
well, as a homeowner,
Yeah.
when you go in the variable, and the way I see the interest rates and how renewals are going to impact the market, I think we will see have a little bit more of an impact in the next 12 months on people who are renewing their mortgage and who, quite frankly, can't afford the new rates, who were locked in at a much lower rate. Um, from what I've seen statistically, there are more delinquencies in Canada uh, to start the year so far this year by quite a bit.
Hmm.
So is that a trend to that might continue to rise, and maybe ends up having more inventory? Possibly, I think that will be more of a trend in other cities rather than Ottawa. Ottawa is, typically people that buy here are buying well within their means, from what I've seen, at least from what I've seen from our clients. But that will be something that we'll have to monitor.
Yeah.
Do you recommend variable or fixed when you're talking to clients?
Yes. So what I'm always conscious of, I always think, what is the bank pushing right now?
Mhm.
So it's interesting. If they're pushing a 3-year fixed rate, I'm slightly suspicious all the time. Why is that? Is that the best deal for me? Now, I'm also a variable guy. And I think the added bonus of a variable rate mortgage is you can lock in at this rate now. And then if things start to change, then you can just pick up the phone and you can lock in a fixed rate if you like,
Yeah,
without
that's a good point.
the penalty there. So you can gauge how it's going. I think it's interesting what you say. I think there might be pressure to actually make things a little bit more affordable overall for Canadians, which will, which translates in our world into lower variable rates, I guess.
Mhm.
But I think there's a lot of reasons they could go up as well. So I don't know. At my house, this time around, if we were renewing now, we might talk ourselves into a fixed rate, maybe. But a shorter term, certainly 5 years at a fixed rate, I think would be taking a risk in some ways as well. But I think variable is a good call right now. Still, get a good rate, and then if we do see signs of things changing, well, then we can just lock it in before it gets too crazy.
Yeah.
Yeah.
Okay. No, that's good advice. So when you look at our market, like, are there any words that would come to mind for the Ottawa market over the past month? Like, when we're, we got some listeners here that are curious to know what it's like on the ground right now in our market. What words would you describe our market right now?
Are we allowed to swear? Yeah.
Well, I would say it's bipolar. I would say bipolar would be something that's come to my mind, where some of the houses that you think are going to sell really well maybe don't. Other ones that might surprise you for how much they sell for. Like, I find it's a very interesting market. Like, it's very different from property to property, and it's a kind of it's just it was kind of a weird May that way,
Yeah.
where we see some places that you think are going to sell for something much higher, they don't, and then other ones you're in these multiple offers. Like, there's one on Powell that was listed for 1.3, it sold for over 1.8. Like,
hmm
we're talking $500,000 over asking price. I mean, like, that's crazy.
That
You know what
seems
I mean?
kind of
Like,
excessive right now.
yeah.
But I mean, like you say, these neighborhoods are always popular
Mm.
and they've got great homes. Um, and I mean, what is that we always say? I mean, the market buyers will tell us what the market will bear as far as prices. So,
Well, I think buyers in most areas outside of the core, the way I see it, is they're playing it safe. And rightfully so. I mean, you can't really wake up without a negative headline over the past 6 weeks or so,
mhm,
whether it be about the economy, where things are going, the what's happening in the Middle East. I mean, there's so much negativity right now, and then for somebody, interest rates too. People talking about that, and then for somebody to go, okay, I'm going to go spend my life savings on a house. It's hard to feel good about that with all that happening. Um, that all being said, in Ottawa, it's a very balanced market. It's a very stable market. The numbers are still good in Ottawa. Like, looking at the long term, where things are going to go with our market. I'm still very optimistic that we're going to have years of growth ahead in terms of prices,
mhm.
and I think it's going to be a stable growth to what we're used to seeing. But the sense I get is buyers. There's a certain anxiety that is coming with these big decisions, and they have a lot of selection right now,
Mhm.
and so in some cases they're not making any decision. They're just
Yes,
sitting on the fence, as we
that's
as
true.
we talked about
Yeah, yeah,
earlier.
yeah. But it's interesting too because I mean, what I see on the ground is a lot of people waiting to make a move, I guess is the best way to put it, because they while they won't pay too much for a home, and in some areas, I mean, the worst are the areas where this is a great price for a town home or something like this in Canada. But you talk to an agent after they have a showing, and they say, "Look, it's great, but I mean, we can turn around down the street and buy something brand new for 30, 40K less, 50K less." So
Well,
it's difficult.
as you talk with us, I have this on my screen right now. So for a row unit in Canada, as an example, in 2025, the average price for that home was 631,000 year to date. 161 sales. What's very interesting is 2026, 162 sales, almost exactly the amount of sales, which is interesting.
hmm
But the price is lower. The price in 2026, 598, 341 on average, and it's taking a little bit longer to sell. So that 100% that 30,000 has had a big
Hmm.
impact from the builds, obviously, in Canada. A lot of the new home builders
Yep.
getting lower, and we're seeing that a little bit across the board when I look at some of these statistics, which I didn't see last time we did this. So as we get more data as the year comes on, we're starting to see, maybe a little bit more of a change in price in some areas. And these are the ones I have in front of me here are suburban stats. So, big five. So, Stittsville, Canada, Orleans, Riverside South, Barrhaven, and so they're going to have their market, and then the central areas are going to have their market, which is a different market, and then what we read in the paper is that prices are fairly stable, but I mean that's not accurate because it's they're kind of all over the place. Like I said, it's kind of a bipolar market at the moment. That's what an agent had described to me, and I
Hmm.
thought that's very fitting because we're all finding that. I mean, I'm talking to my mastermind group about it, other agents, and we're all finding it's an unusual market.
Yeah.
But it's also a fair market. I mean, if you come to market, you're listing your place and you got a nice home. We stage it well, market it well, price it at a reasonable price. Things it will still move. It will still move. It might take a little bit longer to sell, but things are still happening. What's not happening is when sellers are pricing at the high end of the market, which we've done. I mean, which we've knowingly done with a couple listings where that's how they wanted to proceed. Um, even though the data was showing a different number, when we did that, we were still getting activity, but we weren't getting the offers. And then when we reduced the price to where we had it pegged from the get go, I'm thinking of one listing in particular. Within 2 days, it
Hmm.
was sold. So buyers are not going to strike if it's above market
Yeah.
value.
You
This is
can't bear
yeah,
to think
yeah.
about having so many options and overpaying for something right now.
And they're
My wife would
knowledgeable,
kill me.
and they know,
Yeah.
if it's
Yeah.
overpriced or not overpriced.
But it's interesting because no matter how many options there are, and I mean, I'm thinking of a specific listing, and new build homes that are similar are bringing us down. They've been a big problem. We've still had showings, but we're resale, and no one's really ready to see the value that we have there. And then we change the price to open it up to many new buyers, underneath that, whatever
Threshold.
$100,000 threshold. And there's three offers.
Oh,
Right?
wow.
So
Yeah,
people are out there,
yeah, yeah, yeah.
and you have some people saying, you know what, he can't justify spending this much because the new builds are down the street, and obviously there's other costs associated with those kinds of purchases. But that's one kind of buyer, and there's two more buyers that are, this is a good price, and we like the house, and it's ready to go, and it's near a school, and it's not a construction
Mhm.
zone, or whatever their reasons are, and you've got lots of those people as well. So, like in any market condition, I think you get to the right price, it will sell. But there are so many people still available to buy homes right now that when it gets to the right price, it's not bidding wars all over.
That's where they
You
strike.
still sell for a few grand over asking. People are still trying to get a house over another buyer as opposed to just negotiating with the seller when you get to a point.
Mhm,
Um, so I don't know. I mean, it's confusing. I mean, we price homes where we think the market would like to see them sell
mhm.
generally. And even that price sometimes is still challenging. And
There's no perfect science with pricing, right?
no,
We have the data. We use as much data as we can, and
yeah, it depends who's
also
around buying that
experience
house,
too.
or I mean, again, in Ottawa, you have house hunting trips, right? And
Mm,
so, interestingly, this situation I talk about with three buyers, none of them is a house hunting trip, but in a market that's a little stale, you still have people that are coming into Ottawa who have 5 days to buy a house, and they're ready to act quickly if they can, and they're still getting a good price, I think. And I guess the benefit this year over other years is that you can maybe try something at a house that you like, and if it doesn't work there, then you do have another option that's probably not going to get scooped
yeah,
before you can make an offer at that property as well. But that's still risky business because there's a lot of people out there, and a listing can change their price, and then 2 days later, there's already 10 or 15 people that saw it at the old price. and they ready to send an offer in, right? So you can still lose things quickly here.
Mhm.
So some people are ready to make a decision quickly. There's
Yeah.
always is that mix of people and who's around to buy the listing that you have at that time, right? And I mean, I've been in so many houses recently where it's not shiny and new. It has everything we need in a great neighborhood, but again, we can buy something for roughly the same price or for less, and then add a feature like a pool or something like this. And it could still be good value, but it's still taken away from those great homes that are just happen to be resale right now, or 5 years older than all the new stuff that's out
Right.
there and no one's ever lived in it. I mean, humans like new stuff sometimes, I think, shiny
Yeah,
objects,
yeah.
you
Well,
know?
I see that.
Yeah.
Yeah, I would see that a lot for sure.
Yeah.
Well, it'll be interesting to see where June goes, and I'd like to get in here maybe in a couple weeks from now, and see once the stats come through, because the stats have not come through yet for May. We can kind of get into uh, really the nitty gritty of the stats next on the next podcast. So stay tuned for that. Something to look forward to. Thanks everybody for joining us today. We really appreciate you tuning in, and I hope this podcast is of value to you. Thanks everybody, and we'll
Thank
see you
you.
next time.